It's your boy Simon Says, and we have a banger for you guys today. A banger. We're here in the Crypto Cobras right now, and we'll be doing another, episode 19 of Cobra Technicals. So when we had our video yesterday, we were pretty much just going over, Bitcoin and the falling wedge scenario. The bulls actually ended up breaking out, of this falling wedge. So they were breaking out. Was the fake out incoming? That's that was our question going into the market Tuesday. My fault. Wednesday. Wednesday. So when you're in the market, you always have to ask yourself these questions, right? Always question everything you do, and always question why. Your why is a very important factor in your trading, in your life, in your goals. If you don't have a strong why, then or if you don't know why, you won't have reasoning. When you have these reasonings or this logic behind the info that's coming into your data sensor, what our brain is, it just connects two and two together. So when you get more familiar with recognizing these patterns, and okay, we had a breakout daily wedge, lots of volume, induce lots of buyer liquidity, FOMC meeting, which was a big news event. Usually during those meetings, we have usually when the move would play out, not like this move, like on another FOMC meeting, it might break bullish one way, like a fake out, like bullish fake out, and then reverse to the downside. So that one was we were still waiting on that narrative, or like what was to come, where was the retracement coming. It didn't come. So let's get straight into it after now that we've got the picture, the visualization, right? So 10:29, the short has begun, and then now it's just a waiting game. It was a slow short, letting people cash their profits out, and inducing longs, like, oh, where is this gonna hold? Where is this gonna hold? A little bit more time, more percentage. Bad day for the bulls, man. So if we click here, we see we're still below the 600-day moving average, but it did not test. I think being below it is enough for capitulation after FOMC pump. So that's pretty much exactly what we went through. Here was this ugly rising wedge that was the only thing we had, right? And this is actually kind of funny. So somebody in our Discord, right? he was kind of making jokes, and he said, like, no FUD. I did a roller coaster, are we going down or are we going up? Ship doesn't fly, right? And then it was kind of funny. This wedge actually kind of looks like that chart, right? It kind of looks like that ship. So we're gonna name that wedge, the Titanic. But yeah, that was pretty interesting. And then, yeah, here we go. New chart pattern, the Titanic. You can see how that wedge resistance was actually, really steep. But if you guys, aren't in the Discord, this is where you need to be. We have, tons of educational info. You click here, and then, you just boom, and you get started, and you could just go down, go through, and then, get on to the next topic. It's all in order. So yeah, that's that. Let's get into the charts and see what's really going on. So our market cap, right? Our market cap is below the $2 trillion mark. Bitcoin dominance is also below 40%. ETH is about 16%, about 18.6% dominant. So the whole crypto market is, roughly 20% in ETH, roughly 40%. That leaves everything besides 1 and 2, 3 through 13,000, right? All the coins that this exchange is tracking. That leaves 1 and 2 at 60% of the market. So the other 40% is really like the battle. How do I get back? What is this? There we go. So your market cap is also how you get your X's, and also, you know, why the lower caps, if we look at like something like Zilliqa today, which had, you know, a massive pump, and then, you know, now it's down for the day. You can't really see too much data on this chart, but we'll get right into this. So this is from, you know, May 4th. It's at, you know, 7 cents. Today is the 5th. And then, you know, you were sitting at, you know, 9 cents in the morning, about a 20% gain. And then, you know, this retracement is maybe about a 0.5 or a 618 retracement, just from looking at the charts. But also note, you know, the market cap, this is only sitting at 1 billion. So for this to get to, you know, 2x, or, you know, 14 cents, this market cap would have to get to 2 billion, roughly, or 2.2. All right, let's get into it. Remember our smiley face on the weekly or the daily. This was just, you know, too steep of an angle for us to climb right now. But note how, you know, there's still volume in the market. This is still consolidation. This is still consolidation. We're not trending yet, right? We've hit our high. We kind of noted that on the stream, I believe. We seen that daily RSI, or during the Discord, during the day, we seen the daily RSI have a nice pump, you know, straight from the 40, hitting roughly, you know, the 50, let's say, the 50 RSI, the midpoint of the RSI. So that would be like, you know, the halfway point. It's like a fuel gauge, I kind of monitor it. But pretty much since even April 4th, we've been in this like channel, we've just been, you know, ranging down. So we really are testing the lows. But all RSI has to do, right, is not close lower than, you know, this pretty much support line, and we can still see bullishness from here. It's not going to be clean cut, but, you know, we still have some supports down in this range that we're probably going to be looking to induce, or, you know, we would have to hold some supports probably from pretty much this impulse low, right? That's like the next kind of, this is the range that we're kind of playing in. And it's a vast range. We've never been here before. That's why we could just keep cutting like a knife, right? Because everyone, you know, this is when the market's just in FOMO. Well, not FOMO, FUD, I should say. But I guess you could say it's two ways, right? So let's just see raw price action. What did we see on these candlesticks? Doji. Doji held, you know, a higher low. So this, we didn't make a lower low. And then we made a higher high. This higher high from here, you know, we made a higher high. We didn't close above this candle closed, the bullish candle, right? So then immediately, what we're like kind of thinking should be that maybe, you know, we didn't close a higher high, we wicked it, but maybe let's draw like a Fibonacci to the low. We see that we're holding under, you know, the 0.50 level. Since we didn't break the high, pretty much we're waiting. If you waited the next hour, if you, you know, put a long in, maybe you would have had, you know, some success. Not really any success. The range was so small that we're playing in. We have to go to, you know, a lower time frame. But everyone, you know, what everyone saw was just, you know, break out of the downtrend. Let's like kind of pinpoint that, why we had to break, right? So we see this red line was acting as a pretty strong resistance. Also, when we flipped, that line, we started holding that support. Boom, boom. Very slow, methodical 12-hour pump, maybe even 16 hours. And then what we see here is, just sideways consolidation could go either way. And what do? We pulled the BART. When we started mentioning the BARTs, we were right here, right? We had that first one came up. We had that first one come down. Notice how, when the short came up here for my entry, around 300, where my entry is still, got there. If my stop loss was on my entry, it's taken out, and then, the dip commences. So that's what the market does. It usually comes right back to your entry before the actual move plays out. In this case, the low couldn't hold. We could not hold a higher low, right? When we start coming down, that's when you start to measure the fib. Like, oh, where are we gonna hold as, this being a higher low? This is the lowest low, so this lowest low has to hold for, the bull trend to continue. Well, that didn't happen, and we just, came bearish. Let's see it on the daily. So it's the same thing on the daily. To go bullish, you have to make higher highs. So this doji, for a little bit in the day, it was a higher high. We couldn't close there. We closed right above it. It was a doji indecision. We came down. This daily couldn't make a lower low. So pretty much what happened, we broke this steep trend line. It was a daily trend line or daily fallen wedge. And we knew we might have, some rejection just because the market has been bearish. And, we're in this consolidation on the RSI. We've seen that this top, we're above that top, right? When I looked at that top, that's this doji up here. So I'm saying, okay, there's, something's not right. It kind of pumped too hard. But now we're looking at, let's go down to, current price action. And this is how, usually a dump commences. You have a nice little 2-hour period where you're just going sideways. And then, next leg could come in. There's still 39 minutes left in this candle. 2 hours testing 20 RSI. Haven't seen this in, well, we have. We saw this pretty much before the bull trend started. So you can see from when we hit 48K, we had, a bear trend. Here was, slightly bullish, but then we ranged. Then we started ranging. Bear trend. Here we hit a low. Here we hit a double bottom. So sometimes it's not about looking at the whole, bars. Sometimes you could just see the lines as well. So here we hit a double bottom, and then we started our bullish trend. Pretty much even up to here, like here was the end of the bullish trend because we couldn't make any higher highs. We made a lower low. So this was bearish right here. And then, bullish again. And then this is just like when the tops are getting, exhausted. Look at where it's coming from, around the 60 RSI. But now, the RSI is pretty much reset. It's pretty much correlated because, this is the lowest point RSI has been, right? RSI down here, over here is now like RSI over here is making sense because look at how big of a dip it came in. So now the markets, have kind of put some balance back into it. If you look at like some of the other lows, if we look at when we were here, like this, when we came down to the low of, and this is, still our low points that we're trying to hold. So note those are, our key supports. We see kind of how we're like testing this area right when, we consolidated for 2 hours before we pumped. If we go across the line, this is also good, check to see where price action is, this dotted line, as you drag it across. So we see here's, resistance area now. Let's see, hold on. All right, but now that we're kind of done with this, let's just do a lower time frame markup, because the lower time frames really do make the higher time frames, as we've seen today. Dang, Z, where's my music at, bro? I need some more energy, bro. Feeling this short. And look at this double bottom coming in. Look at this dip coming in. Why am I not on the 5 minute, bro?
Let's go.
Yeah, man. I need to take my profits right now. Hold on. Should try and do me dirty again. It will do you. I'm sorry, guys. Get back in my mode. This thing will do you dirty if you let it, right? This thing it will really come for you, right? So like all the people, buying off supports and thinking this is going up because they're on a lower time frame chart and they're seeing that 5 minute went oversold. This is when you get wrecked, right? Look how many double bottoms we put in. Can't even see it on the RSI. Look how many double bottoms we put in. Even when you make a little head and shoulders on the RSI, that pump does nothing, right? Look at the price action pump, but look at the RSI pump. We already came all the way back up to the 40 and got rejected, right? And then we come back down. Now when we go oversold, the dips are even more vast, steeper, more powerful. And that's what you guys have to kind of pick up on. Like the volume in the RSI can be deceiving. Like when we get into those areas, it's at first it can be calm, but then it can pick up immensely. So let's see if we have anything. I don't have anything. The only thing we have is support zones, supply, and distribution zones, right? But yeah, let's get into a different chart where we can see some dynamics. And I really do, after we get done with Bitcoin, we're gonna go over the total market cap real quick. Just a quick little rundown, 5 minutes. Let's just see what the other charts are saying, all right? Go into 45 minute. Let's run this one back. Okay. We got a nice pump from this falling wedge, right? We caught the falling wedge coming down. FOMC, short squeeze, right? This is inevitably what it's called. Or, trap the buyers, and then the short actually comes out and plays out. Note on the 45 minute how this isn't a divergence anymore. It's still curling down. And this price action is lower than this low, the original low we came down on. Look at this line, how it's been holding as support. The last 45 minutes actually got hit right on the head. So let's take a better look at that line. Let's see where that line's coming from. What do you know? It's a daily trend line. It's literally oh man. Okay. Are we going to be targeting these highs coming up? Let's see. So we see we have so this red line is actually, okay, perfect. We don't even need a line. We would extend this one. This is our weekly tether line, my boys. We flip this. Oh my gosh. 25K Bitcoin. I'm just kidding. No FUD. First we'd have to see, we flip this, we see 32K. Most definitely. We can see how 32K was acting as a nice support, especially when these dojis and smaller candles came in. And then once we broke this line, we held a nice bounce. But testing this line, or maybe the top of this resistance would be first. Ooh. Oh my gosh. All right, so this is why this area, this time we're in, right, is such a critical point, right? We're on the weekly time frame, and we're having interaction. When we have weekly interaction, look when we touched up here, big volume, right? We could have probably found that one a little bit better if we attach that top, attach that one, like something like that, right? And then we seen like a weekly doji come in. Not doji, but indecision, rejection from the top. Couldn't close over the wick, or did we? We did close over the wick, but it was close. But anyways, so this is the top. But sorry guys, I just saw the RSI on the 40 on the weekly, and we also, I mean, we're lower than this price action. The 4 candles on the weekly that we were looking at, the 4 symmetrical candles, but we're also testing this open. So this open is going to be this is going to be the test of pretty much everything for the weekly test. We do slice this, expect, I'd say expect like the top of this range to fall. We're already here, so shit, like I expect 32 or 34 through 32, the bottom of this candle for a second. But weekly looks nice. I mean, there's a 5-minute bullish divergence. Let's keep going down. I mean, so that was just checking out this chart, right? So this chart is at a vital point. So yeah, so 4-hour close coming in. Wow, what a big candle to close below this line. All right, next chart. Ooh, no, got right to that 618 lower high, maybe a 786 test. If we want to see where that fib was coming from. Oh my gosh, I'm going over time. Not that high. So boom, it was this high, right? Not this last high, but it used the fib from the next higher up high, and then you see the 786 rejection. We also see the break of the falling wedge. The kind of retest came in. Well, it didn't really retest the wedge, which is sus. Such a big wedge, no retest. Daily FOMC meeting, cool. Notice how the pump came after a doji. So the doji showed indecision, but it also showed strength. One last wick to just get everyone that entered right here, stop loss on entries, and then continued. And then, downside, we already went over, closed below the wicks, etc. etc. Next chart. All right, we're gonna have to clean up some charts now, because. All right, last thing, total market cap. So we went over total market cap and we saw, we were below this $2 trillion mark, right? Nice psychological resistance for us. Once we hit it again, we got rejected. Now, you might be asking yourself, what was the total, all-time high of our total market cap? About probably 3 trillion. Right on the dot. So, psychological numbers, they do work. They are, staples, and you have to, be careful of them. Don't put your stop losses around them because they will be hunted. Notice how the weekly, still above the 40 RSI. We're getting lows on this week, so 3 days left in this week. We're getting lows on this week. We're actually below all candle bodies, and this looks kind of like a descending triangle almost, right? But it kind of just, so that was a fake out of descending, remove this, or maybe even like, so now this is what I'll be watching, something like this. For descending, maybe we hold support here, bounce up, we get a rejection here, then we'll know we're coming down again. The market likes to play, so I'm still kind of holding in that we could capitulate. Notice the last time Bitcoin was at 30K, our market cap was 60K. I'm sorry. Well, yeah, when we came back down to 28K, our market cap was way down here. This is showing alts have a lot more strength in the market. As Bitcoin's coming down, there's still some value holding up in the market. So alts have been stronger than Bitcoin. And then we'll just look at ETH to BTC real quick. This is too low of a time frame to look at, even though we're on the 4-hour. So on ETH to BTC, we have pretty much the green trend line is an ascending triangle. You see we hit resistance, support, resistance. We're making even base resistances, higher ascending supports. We broke out. When we broke out, we held above this zone perfectly. This last wick held the support. As you know, this week came down, we held above this wick, this support zone. Pretty much it was a fake out. So we faked out to the upside, we came down. Notice how it was also a symmetrical triangle. So when we came down, we held the symmetrical for 2 weeks before we fell down. And then, now, actually ETH has been still rallying, since the bottom almost. The last time we hit the bottom, which was, what was the recent bottom? Was it 32? Sorry, guys. So ETH was 2,361. So 34 was our recent bottom, from the low of the downtrend. The low of the downtrend. And if you wanted to measure that, right, this wick that we came down from to the top, right now the bulls are testing the 786 retracement. So this is how everything's coming together. It's the perfect storm, right? Like, okay, we just came off a smaller time frame 786, which we rejected from. Notice how the 600-day moving average, we're below it. Remember when we were testing it, I said we're below it now, and we're holding as resistance. We came back up, we didn't even test it. We got close, we didn't test it. When we're below it, enough, when we already had a test, sometimes, it doesn't come back. And that's how you move away from your moving averages. Unfortunately, in this case, we're moving, still to the south side of it. South side. But yeah, guys, that's about it for today. Thank you guys for your time. You guys have been, amazing. Is there any questions before we wrap up the technical session?